Let's talk about the newly listed company, CleanMax Enviro Energy Solutions. They reported actually a pretty good set of numbers in quarter three. It was aided by higher capacity. The revenue was up, profitability after tax as well looked good on a year-on-year basis. We have with us Kuldeep Jain, Managing Director of the company, who joins us on the show. Hi, Kuldeep. Good to have you in the show. And we just have the key data points that are flashing for our viewers on the screen. Well, we understand that the total contracted capacity for 3 gigawatt, the EBITDA could be ballpark around 1,800 crores, but that's when it functions for the full year. If you just try to extrapolate the number, quarter four should look better than what we have seen, that run rate that we've been doing of roughly around 300 crores of EBITDA. And for the following year, what kind of an EBITDA number are we looking at, since we'll have the full 3 gigawatt and more that will be operationalized? Go ahead.
Thank you, Nigel. Yes, we've had a great quarter with about a 40% quarter-on-quarter increase in our EBITDA, 33% if you look at the first 9 months, because our results are till 31st December. And yes, as of today, so the run rate EBITDA number is as of 1st March. Our run rate EBITDA from 3,000 megawatt commissioned already is about 1,800 crores on an annualized basis. And, we've added 1,300 megawatt of capacity in this fiscal already on a starting base of 1,700 megawatts. So that's like a 76% increase. So yeah, things looking good for next year.
All right. And in the coming year, how much will you be also adding in terms of commissioned as well as contracted capacity?
So we've given a guidance that we should be adding upwards of 1,500 megawatt for the next financial year.
All right.
So we've added about 1,300 this year. We've given a guidance that we will add about 1,500 megawatts.
So you'll be at around 4.5 gigawatt odd or thereabouts. And at that sort of capacity contracted, what kind of EBITDA can you do?
It'll be closer to then on an annualized run rate basis, 3,000 crores, which is what you'd sort of get to
in the following year.
Okay.
When we look at quarterly numbers for a business like you, are the numbers essentially going to depend on the amount of capacity which is commissioned? I mean, that's it. I mean, that's the main variable for you in that sense?
It is, yes. The driver is energy sales. So what was your capacity operational at the start of the quarter? So the way to look at it is energy sales, EBITDA margins on the energy sales. So those, our overall revenues are up for the first 9 months of this fiscal, about 30%. Margins have also improved with operating leverage, and therefore, EBITDA growth has been 33%. And the reason run rates and capacity...
Yeah, these are long-term, as we explain.
On an average, right? 20
So my point is, you started 100, right? And capacity goes up, say, by the end of the year by 50. It's 150.
Yeah.
I mean, your numbers would roughly correspond to that increase in capacity in that sense.
Next year's numbers would reflect 150 megawatt operational at the end of the year.
But is there a seasonality to your business? Because your 9-month revenue growth is about 23%. Revenues, not the EBITDA. But if I look at purely Q3 is up 13% year on year. Quarter on quarter, it's down 20%. Is there a seasonality?
There is a little bit of seasonality because, July to September has very high wind power output, and the next... So, you look at this quarter versus same quarter last year to address the seasonality point.
Okay. So you give us the pipeline, as you see it. You'll add about 1,500 megawatts in the coming year. You've also said in the press release that you are in the mid and early stage, evacuation pipeline of 4.8 gigawatt across the country, which is yet to be contracted. So tell us a little bit more about this.
What we have contracted for energy sales is about 5,700 megawatt. As of today, 3,000 is operating, which means that the rest will come up in the next 2 years. But a health metric for a business like us is how much evacuation capacity you have, because on that basis, you will achieve contracts going forward. Right? So that's also very healthy because that has risen. It used to be at the start of this fiscal, 1,500 megawatt evac we had, which we had not contracted.
What does it mean? What does evac pipeline mean?
You can evacuate that much energy into the grid. So it's the starting point of our business. On the basis of which clients then say, okay, you are ready to serve me. Okay, yes, I will give you a contract. So then you have contract and then you build it. So the pipeline is evacuation, contracting, construction.
And are you able to convert 100% of the evac pipeline, and how long does it take? We've got this number of 4.8 gigawatts. How does it tie in with the 5.7 gigawatts that we know?
Typically, it should be done, we think about, we should always have evacuation for the next 2 years of contracting. there's some uncertainty because you have to achieve sales against it. So, it could be a year and a half, it could be 2.5 or 3 years. But yes, on an average 2 years, we should be able to contract that.
So you essentially, taking off from what Rima asked you build all this capacity and then you go to customers and say, well, we can supply and we can get into these long-term contracts with you. So you need to have an operational capacity which you can offer to, ready to be offered. Is that the way it works?
We offer, we don't build the capacity and then sell it.
Correct.
We have evacuation first, which customers want to see readiness. Look, will you be able to supply me? So that's what evacuation and land and those kind of things prove. Then the contract and then the construction. So there's no speculative builds. There is no merchant power sales for us. It's 100% of our energy sales is long-term contracted revenues with corporate customers who are typically AA, AAA multinational.
So again, then I'm not clear about what that evacuation really means. I mean, if you go to a customer and they say, well, we'd like to do this, then you kind of go back and build it, right? I mean, depending on the terms and how much they need, etc. So then where does this evacuation come in, that number?
Evacuation is even customers will see that, look, can you supply me power? Right, if you're looking to buy from us, can you supply me power? That means, do you have a plant? Which plant will you supply me from? Does it have evacuation? Do you have some of the land tied up so that I can trust that you will build this quickly? Right, so that's where evacuation
doesn't
comes.
Land, etc., the other factors of production come in once the contract is signed? I mean, it depends on the contract, right? Not otherwise. As you said, you don't build anything and then go and offer these.
Yeah, but you don't wait for the contract to keep acquiring land. We lease or buy about 3,000 to 4,000 acres of land a year. So you don't, you keep prospecting and...
Give me that number earlier. How much of this capacity is on site at commercial and industrial establishments?
About 15% of our volumes are on site, 85% is off site.
All right. Kuldeep, it was a tricky time when you're listed because all of a sudden...
in the middle of a war.
All of a sudden, the equity markets went into a tizzy.
Yes.
So challenging times. But as I've read in the past, you have seen challenging times. So your shareholders will be betting on you pulling out of this one as well and coming out with the better numbers. So let's solely focus on numbers. Your market capitalization is around 10,000 crores approximately.
Yes.
Tell me the updated debt number.
It would be around 9,000-10,000 crores. Yes.
As of now, post the IPO, it will be around 9,000-10,000 crores. And what is the net debt to EBITDA number that you're looking at?
About 5 times. Net debt to EBITDA. We are keeping that consistent.
Around 5 times EBITDA, right? So effectively, you're looking at your EBITDA number, mathematically, should be at around 4,000 crores in FY28, FY29.
Might be, but we don't give those predictions and...
but no, 10,000 crores, 19,000 crores is your EV. And if you want to stay at around 5 times or sub that, then it should be in that vicinity. So mathematically, you could...
The arithmetic is cannot be faulted.
Okay, all right.
Can you tell us the average PPAs for the recently contracted deals?
So, the contracted and being built right now is at an average tariff of about 3 rupees 80 paise.
Okay.
And for an average contract duration about 23 years. And about 43% of it is with data and AI customers, both big tech, which is the biggest chunk of this, like firms like Google and Amazon and a few others, and also with data centers in India. So we've added Princeton Digital, L&T Data, more capacity with STT, and so on. So that's been a big driver of the growth.
And this average PPA of 3 rupees 80 paise, does it support the margins that you enjoy right now of 60-65% on an aggregate basis, or can it push the margins higher?
So we're delighted that our margins have improved. This year the power sales EBITDA margin is 83% versus 81% for last year. And with operating leverage and high tariffs, this margin numbers are expected to keep going up. And the other thing is even our cost of debt has come down. It used to be around 9.2% at the start of the year. It's about 8.7%, so a 50 bips reduction. And that's led to a substantial growth in profit after tax because, the interest cost is a big
Kuldeep, just a basic question, just to zoom out a little bit. Your basic pitch is cost, right? Lower cost. It's not availability, because, I mean, availability has been
lower cost and greener output. So better product at a lower price.
Because India is still all 80% coal.
That's right.
Like in other Asian countries where natural gas is a big issue now because of what's happening with the war, etc. In India, that is not the case. So availability so far is not been a problem.
Our pitch is cheaper, greener power. So you can reduce your operating cost as a company and lower your carbon footprint. It's better for ESG. If you're linked into any global supply chains, a lower carbon footprint is superior.
All right, and just a quick word, I'm not sure whether you had a look at we focused on power earlier this week.
Yes.
I did a show of Finding Alpha with Nikhil Nigania, and he was saying there's going to be a lot of focus out there. We also briefly discussed the data center opportunity. What's the feedback you've received of late? Because power is going to be extremely important in the coming years as we look to up the renewable energy quotient and as data centers as well become a bigger contributor in the total mix.
I think the global big tech are looking at as India as a big part of the solution for AI data centers, because the amount of green energy they require for that, they're realizing it's only available in India. Middle East could have been an option, but with data centers being targeted in this war in Middle East, that's just brought it really in focus that do you want to be having those AI factories in those regions. So I think you'll see a lot more of that coming in. And AI factories, AI data centers requirements are 10x that of a normal data center.
Okay.
Right, so that's going to be a huge, huge trend going forward, and we are seeing a lot of that.
So a bit of a tailwind for your business then.
Yes.
So just to get back to the overall pipeline, etc., what you would say 2 years down the line, your commissioned capacity would be 5.7 gigawatts?
Something like that,
Something like that, approximately.
Yeah.
Right? And 2 years later, the contracted capacity should be 5.7 plus the 4.8 of EVAC.
Yes.
So that should be 10 and a half gigawatt. Okay.
Yeah.
And just one more question in terms of the average PPA. So for this year, the recent one's at 3.8. What was the same number a year back?
It was around 3.7, so very similar. Similar. We've not seen any material declines in that. So our return on investment kind of metrics have stayed the same or got better.
All right.
So it's a business where we've had a lot more scale, improving margins, return on investments have been improving.
So you've said that the annualized EBITDA for 3 gigawatts of capacity, which runs the whole year, is about 1,800 crore.
That's right.
Is that going to be the same run rate that continues as you add scale when you move from 3 gigawatts of commission to 6 gigawatts? Should the EBITDA be 3,600 or will it be something different?
It'll be very, very similar.
Similar.
It'll be very similar. It could be 5-8% here or there, but it'll be very similar.
This is number total portfolio of some 11 gigawatts. What is that number, Kuldeep?
That's just 5.7 gigawatt is contracted, of which 3,000 is built and rest is under commissioning. Another 4.8 is another 700 megawatt is commissioned, but where the customer owns the asset. So we don't count it as our energy sale portfolio. So, that is around 6.5 gigawatt. Plus around 4.8 gigawatt is this evacuation that we have, which we are yet to contract.
11, 12.
So you add it all up, it's sort of 11, 12 gigawatt.
Okay, thank you very much. Appreciate it very much, Kuldeep, and good luck as you continue to build out more capacity and more customers, etc. So the pitch, as Kuldeep said, is cheaper and greener and cleaner, CleanMax in focus there. Well, I think just want to take back and look at the market.